You know that feeling when you check your bank account and wonder where all your money went? You got your paycheck 2 weeks ago, paid the bills, grabbed groceries, maybe treated yourself to dinner out once or twice, and somehow you are already counting days until the next deposit hits. You are not alone in this, and honestly, what is coming might make that anxiety feel like just the beginning. I am Ben, and I've spent years obsessing over personal finance, digging into why so many hardworking people feel trapped in this cycle. I share strategies that actually work for regular folks, not just trust fund kids or tech millionaires. If you are tired of feeling broke despite doing everything you are supposed to do, stick around. And hey, if this resonates with you, don't forget to hit subscribe and give this a thumbs up. It helps me reach more people who need to hear this. Here is what nobody's talking about. We're not heading into a traditional recession. What is coming is something economists are calling a silent squeeze, and it is already started. Unlike a recession where you see massive layoffs and stock market crashes making headlines, this silent squeeze works differently. It is the gradual erosion of your purchasing power while your paycheck stays the same. Your salary says one number, but that number buys less and less every single month. The rent goes up, the grocery bill climbs, insurance premiums increase. Your car needs repairs that cost twice what they did 3 years ago, and that emergency fund you are trying to build, it is losing value just sitting there. Let me show you exactly how this plays out in real life. Take Sarah, a marketing coordinator making $55,000 a year. 3 years ago, after rent, utilities, car payment, and basic expenses, she had about $600 left each month. She wasn't rich, but she could save a little, enjoy some weekend activities, and not stress about every purchase. Fast forward to today. Sarah still makes $55,000. Her boss said there wasn't budget for raises this year, but her rent increased by $250 monthly. Her grocery bill went from around $300 to nearly $500 for the same items. Her car insurance jumped by $30 a month. Gas costs more. Her student loan payments resumed. Now, after covering the same basic expenses, Sarah has negative $100 at the end of each month. She didn't change her lifestyle. She didn't start spending recklessly. The ground just shifted beneath her feet. Compare that to Michael, who 3 years ago was in a similar position but made one crucial decision. When he noticed prices starting to climb, he didn't just try to cut back on lattes, he fundamentally restructured his relationship with money using what I call the 3-bucket system. Michael divided every dollar into 3 categories: survival money, growth money, and freedom money. Survival money covered his absolute essentials, but he got ruthless about what qualified as essential. Growth money went into assets that could outpace inflation, even small amounts into index funds and skill development that could boost his income. Freedom money built a buffer that gave him options. Today, Michael's base salary only increased by $3,000, but his total financial position improved dramatically because his growth bucket started working for him. He is not rich, but he is not drowning either. Here is another example that hits close to home for a lot of people. Think about your car situation. 10 years ago, the average monthly car payment in the United States was around $350. Today, it is over $700. That is not because cars got twice as good. It is because of longer loan terms, higher prices, and dealers who've mastered making you focus on that monthly payment instead of the total cost. I watched my neighbor Jake get excited because he traded in his paid-off sedan for a new SUV with only a $600 monthly payment stretched over 84 months. He felt like he got a deal because the payment seemed manageable. But let me do the math for you. $600 times 84 months equals $50,400 for a vehicle that'll be worth maybe $15,000 when he finally owns it. Over 7 years, Jake will pay the equivalent of nearly 40% of his gross income just for transportation. That is not a purchase, that is a financial anchor. Now contrast that with Elena, who makes roughly the same income as Jake when her old car needed replacing. She spent 3 weeks researching and found a 3-year-old certified used vehicle. She put down $3,000 she'd saved and financed $15,000 over 4 years at $400 monthly. Her total cost was $18,000 for a reliable car that'll last another 8 years easily. The difference between Jake's approach and Elena's approach is $32,000. Over 7 years, that is not chump change. That is a down payment on a house. That is a fully funded emergency fund. That is freedom. I know what some of you are thinking right now. Ben, this sounds great for people who already have money saved up, but I am literally living paycheck to paycheck. I don't have $3,000 sitting around for a down payment. I can barely cover rent. How is any of this supposed to help me? I hear you, and this is the most important part, so listen closely. The system we're living in is designed to keep you in that exact position. Banks make $35 every time you overdraft. Credit card companies profit when you can only make minimum payments. Car dealers want you focused on monthly payments, not total cost. Landlords know you can't easily move, so they raise rent just enough that you'll grumble but stay. The silent squeeze works because it keeps you too financially stressed to build any momentum. You are not failing at adulting. You are playing a game where the rules are rigged. But here is the thing about rigged games. Once you see the rules clearly, you can start making different moves. You don't need a huge income to start. You need to stop playing their game and start playing yours. That 3-bucket system I mentioned, you can start it with $20. I am serious. The amount matters way less than the habit and the mindset shift. Another objection I hear constantly, what about inflation and market crashes? If I finally save some money, won't it just lose value or disappear in the next downturn? Look, I am not going to lie to you and pretend there is zero risk in anything. But let's talk about real risk. The biggest risk you face isn't market volatility. It is the guaranteed erosion of your purchasing power if you do nothing. Money sitting in a regular savings account earning 0.5% interest while inflation runs at 4 to 6%. You are losing 3.5 to 5.5% of your purchasing power every single year. That is not a maybe. That is a certainty. When you start moving even small amounts into assets that historically outpace inflation, like broad market index funds, you are not gambling. You are protecting yourself against the guaranteed loss of doing nothing. Yeah, the market goes up and down. Over any 20-year period in history, it has gone up significantly. You know what is never recovered? The purchasing power of cash that just sat there. So what do you actually do? Let me give you 5 concrete steps you can start this week, regardless of your current situation. Step 1. Track every single dollar for 1 month. I don't care if you use an app, a spreadsheet, or a notebook. Write down every expense, every coffee, every subscription, every bill. You cannot fix what you cannot see. Most people have no idea where their money actually goes. This isn't about judgment. It is about data. By the end of the month, you'll spot at least 3 expenses that make you think, wait, I am spending that much on what? Step 2. Identify your financial leaks. These are recurring expenses that provide minimal value but drain your account monthly. The gym membership you haven't used in 4 months. The streaming services you forgot you had. The insurance policy with a deductible so low you are overpaying on premiums. The bank account charging you maintenance fees. For most people, plugging just 3 financial leaks frees up $50 to $150 monthly. That is your seed money. Step 3. Open a high-yield savings account separate from your main checking account. This takes maybe 15 minutes online. These accounts currently pay around 4 to 5% interest instead of the 0.01% your regular bank probably gives you. Move any emergency fund money there immediately. Set up an automatic transfer of whatever amount you freed up from Step 2. Even if it is just $50 monthly, that is $600 a year that is actually growing. Instead of dying Step 4, negotiate one bill this month. Pick your internet, your phone plan, or your car insurance. Call them and say this exact script. I've been a customer for X years and I am reviewing my expenses. I am seeing competitors offering similar service for less. What can you do to lower my rate? 60% of the time, they'll reduce your bill if they won't switch. This single call often saves people $20 to $70 monthly. That is $240 to $840 a year for a 15-minute phone call. Step 5. Increase your income by 10% within 6 months. I know that sounds harder than the other steps, but hear me out. This doesn't mean asking your boss for a raise, though you should do that too. This means adding income streams. Freelance your skills 2 hours a week. Sell stuff you don't use. Pick up one side gig. If you make $40,000 yearly, 10% is $4,000, or about $77 weekly. That is absolutely achievable with focused effort. And it changes your entire financial trajectory, because it is new money you can direct entirely toward your goals. Here is why this matters more now than ever. The silent squeeze isn't temporary. The forces driving it, massive government debt, supply chain fragility, labor shortages in key industries, these aren't getting resolved next quarter. This is the new normal. The gap between people who understand this and adapt versus people who keep hoping things will go back to how they were. That gap is going to become a canyon over the next 5 years. I've watched this play out in my own life and in the lives of hundreds of people I've advised. The ones who take action now, even small action, end up in a completely different place than the ones who wait for the perfect moment or the big break. There is no perfect moment. There is only today and what you choose to do with it. Think about where you'll be 1 year from now if you do nothing. Same financial stress. Probably worse because everything will cost more. Now think about where you'll be if you implement even 3 of those 5 steps. You'll have a clear picture of your money, an extra $1,000 to $2,000 saved, lower monthly expenses, and possibly $3,000 to $4,000 in additional income. That is not a fantasy. That is math. The system wants you to feel powerless. It profits from your resignation. Every time you think there is no point in trying, someone else gets richer off your inaction. I am not saying this to depress you. I am saying it to wake you up. You have more power than you think. Not power to opt out of the economy or live off the grid. Power to make intentional choices that compound in your favor instead of against you. If this clicked for you, if something I said made you think differently about your situation, do me a favor. Hit that like button so this reaches more people who need it. Subscribe, because I am going to keep breaking down exactly how to navigate this mess. And share this with someone you care about who is struggling with the same stuff. We're all in this together. And the more people who understand what is really happening, the better we all do. You are not broken. The system is. But you can still win. Start today. Start small. Just start 1 year from now. You'll wish you'd started today. So let today be that day.